Good afternoon, ladies and gentlemen. I hope that you can hear me, hope that you can see the slides. Welcome to the next in the ActivTrades Monday Market Matters webinar series for 7th of August 2023, where today we're going to talk about trading price action combinations. As I said, hope you can hear me okay, hope you can hear slides and such, hope the tech is all working for us. I appreciate that there might well be people here who use price action in their own trading, and what today I'm going to just sort of go a little bit deeper into looking at the kind of combinations that can occur between price action charts and price action setups, and how you can sort of utilize and combine them in your own particular trading. So what should we talk about today? As always, we'll do a little bit of an introduction to Monday Market Matters. And what we really, as I said here today, is help you understand the importance of being able to combine price action setups in order that you can build yourself a more comprehensive trading plan, identify better setups in order to increase your trading opportunities. So, as I said, relatively simple, just sort of, making people aware of the opportunities that arise when we combine certain price action setups. As always, I appreciate that we have a broad range of experience of people who join us for our sessions, from complete beginners to intermediate traders. You're all very welcome here. It's great to have you here. There'll be something for everyone here. And I do also recognise that we have whilst these are the English-speaking webinars, we have a truly global audience of people joining us. Just to say that you're all very welcome wherever you find yourself in the world. We hope that you're well. We hope that you've been enjoying these rather interesting and eventful markets that we've been experiencing in 2023. So, for those of you who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities for my own trading. I tend to be a trend trader from a longer term swing and position trades, and I tend to be a reversal trader for shorter term intraday traders, all of which is relevant for the topic that we're going to talk about today. So, if you're new to joining us for Monday Market Matters, the whole idea is just to help traders start their week in the right frame as we prepare for the opening of the US markets in about 25 minutes time. So every Monday, 2 o'clock London time, we just cover kind of an element of the news in terms of what's to be aware of for the week ahead. The major element is of course, on education, helping you just give you a little bit of knowledge and insight that you can utilize in your own trading. We'll also have a little look at the tools, the ActivTrades platforms and tools that you have available to you as a client. And as I said, look at the live markets at the start of the US session for this particular week. So there's always plenty for us to try and sort of fit in to our time together. So let's crack on then, shall we? So, those of you who joined us, most weeks, you'll realize that, I talk about how if you're a very new trader, I do not expect you to be able to fully in-depth analyze every bit of the economic news that crosses our path or crosses our desk, but it is important for you to know when that news is coming out. There is an economic calendar available on the ActivTrades website that you can access. You'll also find that there are pieces put out by the ActivTrades analyst team, which are well worth picking up and making yourself aware of. And as I said, just to be able to know when the kind of big news is coming out this week. So, we find ourselves here into what might be looked at as the first full week of August, but we already had a little bit of data coming out. We had the non-farm payrolls on the Friday just gone, and those numbers were sort of just a little bit less impressive than people had hoped. And what we will probably find is that there will be major news coming out this week, but as we go deeper into August, it tends to sort of thin out a little bit as people tend to sort of take a break during this particular month. So when it comes to the news, yes, there will be lots of news, and you can probably see plenty of it on there. But I think really for this week, the kind of major news that the world and his wife will be looking at is that on the Thursday the 10th, where the US publishes its latest inflation figures, its CPI data. will be coming out, and I think most people will be coming out to watch this to confirm the kind of current narrative that we've experienced over the last month or two, whereby those data, that numbers have been decelerating, therefore basically removing the pressure upon, in the American term, the Federal Reserve, but other central banks to raise further interest rates, or if they are, that they are, that we are nearing towards the end of that particular cycle. So I suspect what we'll find is lots of people will be interested, wanting to watch that, want to get that confirmation that the existing narrative remains, and then we'll probably see people thinning out as they head away on their holidays. But we also have UK GDP data on Friday morning. Those of us here, certainly here in the UK, will take an interest in that. And then we also have manufacturing figures and the PPI and preliminary Michigan Consumer Sentiment Index data on Friday. So there will be, as I said, some data coming out here. And but I think Thursday's CPI data will be the main one that people will be interested in. So let's have a little chat about our education element for today, which is all really about combining price action setups. And so, in several of the webinars that we've covered in the past, we have talked about, how to use price action to build your own trading plan. And we've shared various numerous different, simple candlestick setups that provide quite simple, clear trigger and entry opportunities for traders. And today, we'll just go a little bit of a step further and talk about the power of combining these price action tactics. And we're going to answer that question of how can we utilize these tactics to enhance our trading plan. So, the one thing we'd say is that, when you are combining price action setups, they can be very powerful and very helpful, but just by the very nature of it, they are not as frequent as many traders would like. But invariably, when they are available, when we do see them happening, it's important that we actually basically sit up and take notice, because it might provide us a great opportunity in the market. So, if you are very new to trading, and I appreciate that, we do have people here joining you, may actually just be struggling to understand even what price action trading is. Price action trading is it's a very basic means of market analysis using the movement of price over time, and you'll find it's popular with both retail and institutional traders. And really they're looking to analyze that change in price over time. That's the action, so to speak. And typically when I talk about it here in our webinars, I normally focus on price action kind of on the higher time frame, so sort of 4 hour, mostly daily and weekly, focusing over the last 3 to 6 to 12 months. And the simple reason for that is that I do recognize that lots of the traders who join us do not have the luxury of being able to trade full time. They're conducting their trading around other lifestyle commitments. Might be raising children or looking after parents these days, or you might have other businesses, day jobs, etc. that you're doing, and so invariably people are trading around that, and they tend to be sort of trading maybe end of day or sort of longer term time frames. So I tend to focus on that in the sort of most of the examples, but what I do want to say is that price action, I talk about it like learning a new language, namely that it maybe can be a little bit clunky at the beginning, but the more you practice it, the better you become at it, and the quicker it will be to sort of to click for you. And any of the ideas and concepts that I share are equally applicable across all time frames and all instruments. So if regardless of what instrument you trade, or regardless of whether you like to be a scalper intraday trader, understanding price action works across all these levels, and it's a good skill to have as a trader. So let's start with just putting together a simple plan, all right, a simple overall plan, and we go into it in much greater detail in other sessions, but just to allow people the opportunity to sort of start to form a little bit of a routine, in terms of having a plan. Well, what I normally suggest is that, whenever you open a chart, regardless of whether it's Bitcoin or Euro or gold or whatever it is, start with a monthly chart, then the weekly chart and the daily chart by drawing in significant levels, okay, levels of horizontal support and resistance. All right, markets, even though a lot of the execution may still be done, may be done by algos, we're still doing lots of analysis by humans. Humans remember those levels, and we want to identify particular price levels where price may react and provide us with opportunity. So that can be levels like support and resistance. It might be things like, big round numbers. So, we see the Russell 2000 at 2000. We've seen gold at 2000. Okay. And also for some traders, they may be utilizing moving averages as dynamic levels of support and resistance, seeing price bounce off those particular significant moving averages, things like 20, 50, 200 and others. So we want to have a plan. We want to basically frame what we're looking for by actually understanding what's going on that particular instrument. Okay. Because once we've identified the kind of levels in the areas where we want to be looking at business, then invariably we need some price action triggers, and some of the simple triggers that we have covered in previous sessions, which you will all find on the ActivTrades webinar archive on the website, and also increasingly on the ActivTrades YouTube channel. You'll hear we've talked about things like inside bars or outside bars or engulfing candles, Pinbars, or things like keto reversals or even star formations. As I say to everyone, I'm not normally too precious about how people label things like particular candlesticks. So some people might call it a pin bar, some people might call it a high test or a low test bar, some people might call it a rejection candle, some people might call it a hammer or shooting star. I'm not too I'm not too precious how people label them. It's more important to me that you understand what it is and why it has been formed, and what it's telling you, and how you could utilize it in your own particular trading. But we'll do a very quick recap of those before we look at what we're really interested in is about when we start to combine them. So for new traders, an inside bar is, as the name kind of implies, it's formed when the high and the low of our bar, our candle, is fully within the range of the preceding bar. And sometimes that means that preceding bar, you might hear other traders call it a mother bar or a kangaroo bar. As I said, I'm not too pedantic about how you particularly label it. It's more about you understand and recognize what is actually going on. Okay, and the important thing is that the high and the low of our candle is well within the range of the preceding bar. And what I normally suggest to people is that inside bars is a bit like the market, and is a little bit like humans, is that think of it like an organism breathing. Okay, if you think about it, even ourselves, we tend to surge, then we rest, and then we surge again. And it's like the inside bar is the rest, and what we're looking to do as traders to catch the next surge. Okay, so just think about that. The market surge like we do as humans, then we rest overnight, and then we get ready to surge the next day. And that can be exactly the same when we're looking at inside bars. That's one of the ways that I look to consider it. Okay, it's a contraction before an expansion, and we're in a position to put ourselves, utilize that as an opportunity for our own particular trading. So when it comes to inside bars, okay, you can see these ones. Yeah, they all fulfill the criteria. Now I see some people just will work off the bodies effectively, the sort of the open and the close. Whereas for me, this is not an inside bar, because basically the price at one point, it traded up. The high of that candle was above the high of the previous session's candle. To me, that is not an inside bar. Okay, as I say, it has to be inside the range of the preceding bar. Okay, I know some people like to just focus on the bodies, but for me, that's not really the way to be doing it. If the market is traded there, the market has traded there. It may not remain there, but it's traded there. That goes into forming that bar. That is not an inside. That is not an inside bar because of that. Next, I'll have a quick recap of the outside bar, or you'll probably hear more. I tend to label it as an engulfing candle, but not unsurprisingly, kind of the exact opposite of an inside bar, as in the high and the low of the bar fully engulf the range of the preceding bar. And a little bit like the inside bar in terms of it must include the complete engulf of the entire range of the bar, okay, not just the preceding bar's body, okay. There's a reason there are 4 bits a day to the open, the high, the low, and the close, okay. We want to understand the relationship between all of them. The thing I will say about an engulfing candle is that it happens infrequently, okay. They do not happen as often as people would like, but they are a strong signal when they do occur, especially when there is a confluence of events. When we see things like bearish engulfing candles at the end of an uptrend at a particular level of resistance, when there's as I said, when there's a confluence of events occurring, that is when it starts to make them very strong signals, and it provides traders with a clue to the next possible move, where the higher probability move is likely to be. So they are worth looking out for and being aware of in these charts, but they just unfortunately they don't happen as often as people would perhaps like. So just a couple of examples of engulfing candles. So for me, this is most definitely that's a really good engulfing candle, but it's a bullish engulfing candle because it closed it closed higher than it opened. What I want to be seeing is bullish engulfing patterns like these two here. I want to be seeing them happening at the end of a downtrend, and preferably at something like a level of support. Alternatively, for bearish engulfing candles, where we've closed lower than we've opened, I want to be seeing them at the end of an uptrend, perhaps at a level of resistance. It's that confluence of events. That's what gives it the strength. And what I like to see with engulfing candles is I like to see strong bodies. Okay, it's important that the overall body engulfs the whole range of the preceding candle, but I also like to see that we have there's a really strong body there, okay. That's as opposed to a candle that might only have a small body, but long wicks, okay. Whereas I think that's more what they would like sort of term like a high wave candle. Another quick recap: Pinballs, okay, or rejection candles. All right, it's a very popular trading trigger. And they are ubiquitous in terms of where you can see them. And as I said, you'll hear some people will call them Pinbars, some people call them high test or low test rejection candles, or a hammer or a shooting star. As I said, I'm not too pedantic how you wish to label it. It's more important that you understand what has actually occurred. Okay, what is going on, in the sort of the makeup of that bar, and what is it telling us, and how can we utilize that to give ourselves a good trading opportunity. And so, a good pin bar. What we should see is that the open and the close, okay, is within the range of the previous bar. Ideally, you want the candle wick to be 2 to 3 times. All right. 2 to 3 times the length of the body, mainly giving us a long nose that's protruding from the other bars, and good pin bars they stick out, and they are very obvious. But nevertheless, as you'll hear me always talking about, is ideally we want to see them as part of a confluence of events. That's where we get more confidence in our setups. So here we go. Bang. Some pin bars here. These will be determined, even though despite the closes, these will be determined. These will be determined as kind of bullish pin bars, because the wick is normally basically pointing in the direction. Okay, it's fooling you as to where it wants to go. Hence why the name Pin. After Pinocchio, all right, when he told lies, now he's got bigger, and invariably, the wick is pointing in one direction. But the likelihood is that the higher probability is that the price is actually going to take off in the opposite direction. And so, ideally, what we want to see is this happening at these being printed at the end of a downtrend. Or alternatively, when we're looking at bearish pin bars, even though this has a bullish close, we'd look at this as a bearish candle because the pin, the wick. In this case, the wick is heading north, but really the higher probability move is to the downside. We want to see these happening after a good uptrend, or as I said, normally at a level of resistance of some sort, or a particular range. As I said, because it's giving us a higher probability move is to the downside, and we may wish to position ourselves accordingly if it meets our overall trading plan. So, a little quick A bit of a quick recap, but also, I appreciate for completely new traders just helping, just maybe clarifying a few of those particular price action setups. So as we've covered lots of other price action trading tactics in previous webinars, including things like key reversals, star formations, etc. However, what we generally tend to find is that they become even more powerful when they are combined. All right, when invariably you get maybe 1, 2, 3 different kind of candle combinations that provide you with just a little bit of a little higher confidence of where the higher probability move is for the next session. And so, what does that generally mean? Well, it means that when we see combinations on the charts of things like inside bars, pin bars, engulfing candles, and key reversals, well, then we have ideal setups. All right, they give us a high level of confidence that of where the higher probability move is likely to be, and that's all it is. It's a higher probability of a move in one direction over another. There's no such thing as a perfection or guarantee in trading financial markets because just of the very dynamic nature of the way they operate. So but it is, if we are able to identify these price action combinations, does give us an opportunity to position ourselves in line with where we think the next move will go. And so what we'll do today is we'll discuss a few of the well-known ones. Maybe you're aware of them. Maybe you've used them. Maybe you've been using them. Maybe you not realised that actually it was price action combinations that you were utilising. Okay, so hopefully you'll be able to give you, as I said, just a little bit of help, a little bit of insight and knowledge that you can take away and utilise in your own trading going forward. So what we'll talk about is, in terms of combination, we'll talk about one candle combinations, which might sound a bit strange, but bear with me, ladies and gentlemen. 2 candle combinations and 3 and more candle setups. So let's have a little look at some examples. I appreciate a couple of examples. It always helps us just make sense of and understand concepts a little bit faster. So when you hear me talking about a one candle combination, you might say, well, how could it be a one candle and a combination? To me, this is where you have multiple triggers all in one candle. What does that mean? What does that look like? Well, that means is where the candle, it might well be a pin bar, but it could also be an engulfing candle, and it could be a key reversal candle, and that becomes a sort of simple and powerful setup. So there's an example here on the DAX. In particular, we're looking at this candle here. Okay, and this particular candle, why am I interested in that? Well, not unsurprisingly, it's a bit of a pullback in an uptrend. Okay, which what I'm interested at the 50. So there is a confluence of events. But this candle here, is not only is it would I include it as a pin bar because of just the very nature of the way the price has expressed itself, but it is also clearly an engulfing candle. Okay, the entire range of that candle engulfs the preceding candle, so it's a pin bar, it's an engulfing candle. It is also a key reversal candle. A key reversal candle being that price started off and pushed to new lows before price reversed completely and it closed higher than the preceding candle's high. That is how I would define a key reversal candle. So it's just one candle, but it is also a combination of a pin bar, an engulfing candle, a key reversal candle, etc. And that is what we start to get interested in. That is where it starts to make a lot more sense to us. As where it basically gives us a great opportunity, and as you can see for yourself, it was part of the uptrend accelerating away. So the thing I say about this is that it doesn't happen as often as we would like. That's the kind of the challenge with it. As I said, there's no perfection in any trading method or trading setup. We have to recognize that. But when you see such a setup occur, it is invariably well worth you sitting up and taking notice of, all right? Because there is a higher probability of a good move after it that you might be in a position to take advantage of. So that's a one candle combination. The next one is, a two candle combination, and not unsurprisingly, it's where you have two candles, all right, combining together to provide a stronger trigger. And, the most popular one I would suggest is where we see a pin bar and an inside bar candle combination. Okay, you can get a reversal with a pin bar, which might be followed by an inside bar, or vice versa. You might have an inside bar followed by a pin bar identifying reversal. So in this particular example here, just hopefully you can see is that price was in price in a very nice uptrend until we got to near to where this particular level of resistance. What we actually had here is, hopefully you can see this candle here, this first candle, candle one, is actually an inside bar. The price has, it's made a very strong bullish move there. We then get an inside bar there. Okay, so remember what I was saying. The inside bar is the rest before the next surge. Okay, we surge. Okay, so you can almost say like that's the surge. This is part of the rest. The next candle, you can see the next candle there is, it is a bearish pin bar. There is a large wick to the sort of to the north, to the highs. Okay, at at a previous high there, after the inside bar. And what that's doing is, of course, that is showing us that the likely direction, the higher probability, is to the downside, and we can see that basically that's what price does for the for the next couple of, well, I'm not sure what time session, doesn't really matter. You'll find that actually I quite often cut off the time of the dates because actually its price is fractal, all right. And I think this is actually a weekly chart, but it could be a 5-minute chart, it could be an hourly chart. It doesn't really matter. What matters is understanding that you had after the end of a run, you had a two candle combination of an inside bar followed by a pin bar, and that was your opportunity to be short. Okay, looking to short, for new traders, at the break of the lows of those candles with the stops above the high, and then you're really, you're looking at sort of identifying trading towards one of the particular levels of significant levels of support, all right, or anything that provides you with an asymmetric reward to risk combination on your targeting. But as I said, a very popular one is inside bar and followed by a pin bar. Okay, and at the, as I said, confluence events at the end of a trend, when we see that in itself is a very simple price action setup. That is the combination of a couple of triggers coming together at the right time and place that gives us an indication of there's a higher probability of price moving in a different direction. And then what we have is the three candle combination. Okay, and including the name, isn't it? Really, it's where you have three or more candles combining to provide a trigger. And sometimes that can be part of a bigger chart patterns we'll talk about in a couple of slides time. And as I said overall, they don't happen very often, but when they do, they are powerful, and you generally do want to take notice of them. And there's just even there's a small example here. Okay, this downtrend, which is actually triggered by a two candle combo. Okay, you've got inside bar followed by a pin bar, engulfing candle, key reversal in itself as a one candle combo. But what we're more interested in is price has moved down. Price then prints here. What does price print here? It prints. That is it's an engulfing candle there. Just excuse my artistry. I'm a better trader than I am an artist. You have an engulfing candle followed by a key reversal candle. The next candle after it, okay, is most importantly it's an inside bar, but you'd also say it's it's a pin bar, and then the third candle here, okay, that is in itself a pin bar, a most definite pin bar. So we've had that three candle combo, engulfing candle, key reversal, inside bar, okay, inside bar, and then pin bar as well. Okay, so and as I said, it can actually happen to be part of a bigger chart pattern, And so some people will be looking at that and say, well, actually, Paul, isn't that just a normal double bottom reversal pattern? Which it indeed is. But, what we're interested in today is the fact that, this was a 3-candle price action combination that gave us an indication that, that this down move was likely over, and the higher probability move to the upside. Okay, we were looking to reverse, which is, as you can see there, that's exactly what we did. So, as I said, 3-candle combinations, they don't happen as often as we would like. All right, they don't happen as often as we like. But when we do see them, when we see that combination of price action of, engulfing candles, inside bars, pin bars, when we see it all coming together one time in place, that is a very strong signal. Right? And it's most definitely worth including it as, let's say, as part of your analysis when you're going through charts, seeing if there are, not unsurprisingly, if there are 1-candle combos, 2 candles, or 3-candle combinations. They don't happen as often as we'd like, but they are definitely worth sort of taking on board when we do see them, when we see them occurring across the charts. So we've just got a couple of different examples here. So this was the weekly chart on gold, and remember, I put these in just to be educational examples of clear-cut examples. They don't happen as often, but we're interested in seeing them when we do it. And in particular, what we're interested is here, namely that prices come back down to a range there, okay, to a significant level of 1200 at that time. And what we actually see is at that level, we have a 2-candle combination. We have an inside bar followed by a pin bar. And the other thing that gives us a little bit of, strength and confidence and belief is that not only is this like a 2-candle combination, okay, at a significant level of support, but this candle here is also, it's a pin bar. It's an engulfing candle. It's also a key reversal candle. Bring a look at that price pushed to a new low before price reversed, flew up and closed above the high of the previous candle. And some people, might even say, well, actually, Paul, is these 3 candles, is that not a morning star formation? And I wouldn't disagree with you. I wouldn't fight you. I wouldn't fight you on that. But even if you're just looking at this as a 2-candle combination, it's an inside bar and a pin bar. But what also happens is, it's a pin bar that's also an engulfing candle. It's a key reversal candle that has happened at a big round number, which is also a significant level of support. And what we can see is, this is the weekly chart. So really, for the next couple of months, effectively, price basically ran its way up until it got ended by an engulfing candle. So that's what we want to be looking for when we see these candle combinations. It is invariably as I said, it's worth making note of them. Just a simple example on the Dow on the weekly chart. Okay, it has been in an uptrend. Okay, this pullback was a bullish engulfing key reversal candle. But when we see the pullback here, it's kind of the price action, as I said, it's not entirely pretty, but those of you who traded for a while will know that what you want and what you get can sometimes be two very different things. In this particular area, we print, a pin bar. We print a second pin bar, which is also an inside bar. We print a third bar, which is another inside bar, and then we actually sort of print this, this candle, this bullish candle here, which is also a bullish engulfing candle. So you have got, there's a little bit of a combination going on there. You've got pin bars, inside bars, engulfing candles. Okay. Giving you that road. Now, of course, this is, it's a weekly chart, that might be in terms of, once you start looking at, how to buy it in terms of, for new traders buying the breakout news with the lows, the stop losses beneath the lows. In terms of trade risk, that can be, considerable. All right. That can be considerable. But, as I said earlier, this is about price being fractal and recognizing, this might be an example on the Dow weekly chart. But to be honest, I could have removed that. You'd be able to find this on a 5-minute chart, on an hourly chart, 1-minute chart. All right. The important thing is once you practice, building this into your analysis and having the level of cognitive recognition, well, then once you see this once, you will start to be able to happily see this anywhere, anytime, any place. Okay, regardless of the instrument, regardless of the time frame. So another example here, euro sterling on the weekly chart, and we're here, big round number here, significant number. Remember, as I said, these are price action combinations, but they're even stronger when we have them, a confluence of events. And so we can see this. Last time the price came up to 90, it drifted away, and price comes back up again. Okay, and what do we get here? This is, it's a bearish pinball. Even though it's a bullish close, it's a bearish pinball because the wick is pointing, to the north. We then get a couple of weeks of, the inside bars. Okay, the inside, still inside the first bar, but they're also pinballs. They're also happening, and then we get, this candle here. Okay, which is, it is a pin bar. Okay, it is engulfed the range, the preceding candles, so it's an engulfing candle, and also what's happened is price is pushed to a new high, whereas actually it's rolled over and closed beneath the low of the previous session's candle. Okay, so it's a key reversal candle as well. It's that combination, all right? Combination of pin bars, inside bars, pin bars, engulfing candles, key reversals, and also not surprisingly, it's happened at a big round number, and as you can see, price drifted down there by 500 pips over the next couple of months there. And as I said, this is a weekly chart because I do a lot of my own work in weekly chart, but this could be a 5-minute chart, could be could be a 5-minute chart, could be an hour chart, could be 4-hour, could be daily, whatever your particular trading style might be. Price action combinations like this will happen, and it's that confluence events we're really interested in. It's just the challenges, they never happen as much as we would really like them, but it's important to recognize that. Sort of just kind of other one or two little examples, in particular, kind of the one we're really looking at here is that we can be in a very nice trend. Okay, we can be in a very nice trend, and then there might be opportunities to join that sometimes might provide you with combinations. So I've put a question mark here because some people might say, well, Paul, isn't that a pinball? I would not include that as a pinball myself, okay, because of the way it's closed. Okay, people might say, well, Paul, isn't that a 2-bar combination there? You've got an inside bar after a pinball, and I would suggest no, it's not. Okay, it's not. Whereas, if we go on and we see the next week, well, then here we do have a 2-bar combination. We have basically a very small inside bar followed by, the next candle is a pin bar. It's also an engulfing candle. It's also a pin bar. So it's a combination of a 2-candle combo with a 1-candle combination. And we can see the price moves itself away. And actually, eventually, again, it comes back to the sort of 50-period moving average, and it prints a pin bar, and lots of people will be happy to trade that. But then also what we get is a sort of an inside bar as well. So you're getting a pin bar and an inside bar. Yes, people might say, well, actually, Paul, the price action's a little bit shaky for the next session too, and that's perfectly possible. That can happen, all right. But remember, our stop loss is always going to be beneath our lows, and we're never troubled there. And invariably, what we see is that after that combination prints, price moves along quite nicely. So know your individual candlesticks. Okay, understand and know them. All right, this is that is not a. Oops, let me just bring up my drawing tool. That is not a bullish pinball in any way, shape, or form. All right, that is not a trade setup. But understanding and recognizing, okay, when you are seeing pin bars, inside bars, engulfing candles, key reversal, and a combination of them both, okay, that is what we're particularly interested in. And and even though they don't happen as often as maybe we'd like, that doesn't mean we can't wait for the particularly good setups, the particularly clear setups, especially when you're a new trader. Kiwi against Japanese yen, but this on a different. This is on the weekly chart. And what we're interested in is price having pulled back starts to sort of demonstrate sort of the kind of a simple setups. Namely, we have inside bars followed by pin bar, which is an inside bar pin bar, to the next, which becomes our real trigger candle, which is this is part of a 2-3 candle combo. But that candle is in itself in itself a one candle combo because it's a bearish pin bar, all right, bouncing off the weekly 200, which we can see has acted as resistance in the past. But that candle is also not only is it a pin bar, it's an engulfing candle, right? The range of it engulfs the preceding candles, and it is also a key reversal candle because the price pushed to that new high before rolling over and collapsing and closing beneath the low of the previous candle. So it's that combinations, okay? There's combinations going on there, and that's that's really what we're looking for. That's what a little bit of patience, okay, to have them showing up on your charts. But you have to practice in terms of understanding and knowing those price action, understanding when you're seeing inside bars, understanding when you're seeing pin bars or engulfing candles or key reversals, and when you're noticing there's several of them together. That is, that's a great opportunity to be a part of. So, as always, before we just switch across the charts, a little bit of homework for you to take away. So, what I suggest here is, for the next rest of the week, go through your favorite charts, have a look at what your favorite charts. Maybe you're a 5-minute euro dollar trader, etc., whatever. Maybe you like trading the hour and the Bitcoin. Doesn't really matter. Go through your favorite charts and see if you can identify possible price action combinations that have set up in the past. Have a little look and see, how often did they occur? Is it something that occurs, once a week, or is it something that occurs once a year? Because the way you would deal with that, it might be very differently. Also, have a look at where did they occur. All right. Ideally, remember what we're saying is that ideally what we'd like to see is a confluence of events. So, where this is where we've got 2, 3, 4 things all coming together at one time and place, that gives us our opportunity. So, if we're seeing it at levels of support resistance or big round numbers or at moving averages acting as dynamic support resistance, these are the things that can work well for us. And just make a note, all right? Did it provide you with a good trading opportunity? Was there an opportunity there for you to trade that, and how did it actually play out? So, it's all well and good for me to be here and to give you a webinar and to educate you, which I'm very happy to do. But you have to do a little bit of homework yourselves, ladies and gentlemen. Just take these ideas, go and test them, all right? Test them, back test them, see how they look initially on your own particular favorite charts and instruments, and take it from there. So, in conclusion, ladies and gentlemen, we've been running Monday Market Matters, okay, throughout 2023, and we might have one or two little exciting developments to share with you, okay, after the sort of, as we go deeper into the rest of the year. I've said all along that this is going to be an interesting year in markets, and I think it certainly has been, and, I hope you'll continue to join us to enjoy the journey. Remember, if you're new to trading, price action analysis is just a very simple way of analyzing market using the movement of price over a time. And ideally, what we're looking for is looking for price action triggers at significant price levels, prices or zones, because that's what allows us to build simple price action trading plans. And one of those simple price action trading plans might be that where you see price action combinations that provide us with a strong signal. So where you might see 1 candle combinations or 2 candle combinations or 3 candle combinations, or even, based upon how the price action plays out. But as always, as I always say, it's always important to do your analysis and to manage risk. And invariably what you're looking for here is that, understanding the initial price action setups, as you build them into your analysis and into your plan of your analysis, that is what actually allows you and helps you to be able to recognize the combinations swifter so that you're in a position to take advantage of them. So, without further ado, we're going to have a little look at how the markets have opened up and what we're particularly looking at. Before we do, just remember we'll be back next Monday, London, 2 p.m. Right, for the next Monday Market Matters webinars. And next week, what we're going to talk about using the COT report. We're going to just a very little sort of simple introduction to the Commitment of Traders report. All right, very fascinating piece of data that all traders, should be aware of. They may differ on how they wish to use it, if at all, but it is, if you're going to be a trader, it's an important piece of data to be aware of. So we'll be covering that. That's next next Monday, next Monday at 2 p.m. London time. If you've not registered, you could see the QR code there. Take a get your phone camera on that, okay, and that'll take you through to the page to be able to register and that. And I look forward to you joining me for that session next week. And as always, if you want to contact us, you can do. You can see there that there's the English desk number, 0207 6500 567, or alternatively, just email englishdesk@activetrades.com. Maybe you've got some feedback, maybe there's topics that you'd like to see me cover, that you could do with help with. We'll happily take that on board, and we'll happily sort of build that into our plan. We want these sessions to be useful and valuable for you in your trading journey. So you're welcome to join them there. So just bear with me a minute, and what we'll do, we will switch across to the live charts and have a little look at what's been going on in the markets, as we get ready sort of into the open of the US session. So just bear with me 1 second. Boom. Okay, so I'm hoping that you can hear me still. I'm hoping that you can see the charts. Here we have this. I'm always interested as the market's open. I have a profile where I just have the US indices there, and I have the sort of the Dow, the Russell, the Nasdaq, and the S&P 500. And as I've often said, okay, I'm interested to see how did the markets open. I generally tend to tell people to leave the markets alone for the first 15-20 minutes. There can be immense volatility, especially on a Monday, okay, after a weekend, sort of orders there waiting to be triggered, okay, and that sometimes can make for volatile trading periods for the first 15-20 minutes, okay. I know other traders will differ, and they like that volatility, and that's fair enough, but personally I just that's what I've just found from my own experience. But I also said, you hear me say it every week, I like to see correlation between the averages and between the indices. I like to see them moving together. That kind of gives me a little bit more confidence. So when I see charts like these where there are there's a bit of difference, I'm generally sort of tend to be a little bit wary. So what I'm kind of curious in is to see this is the Dow, kind of curious to see, right, just identify where's been the high of the what have been the highs and the lows of the session so far, okay, just to see how price reacts at that in the future. But we can see there price has it's bounced so far off the 30-minute 200. And just have a little look at you can see that there has been a little bit of a reversal there. Undoubtedly, we might see, there we go, that's the 1-minute chart. There is there's a little bit of a bearish engulfing candle, bearish key reversal candle there. I'd be interested to see if it can continue to come back on that. We'll just keep an eye out on that. But Dow has been rallying up. But what we see, if we look at the Nasdaq, the Nasdaq has not particularly been wanting to sort of play in the same direction there. I'm just drawing on my lines much quicker here than I would normally. All right, so please bear with me. We can just look at that. What we're seeing there is that price on the open here, price has popped up here and just basically come to the highs, triggered sort of any orders are there, and then has just rolled over and fallen down to where we'd had the low of the day so far, and we'll be triggering orders there. Okay, so a real clear sort of maneuver in there to sort of just pick up the liquidity, pick up the orders that based around the highs and the lows, and I'll just be keeping an eye on that. There might be a bit of interest there. If we look at, you can see Russell, the Dow has popped up, but the Russell certainly hasn't been wanting to do that, has it? The Russell's been doing exact opposite. And I was talking about this myself to my own clients earlier today about this, namely that if I look at the weekly chart there, this is the weekly chart here. Now, you might be looking at that saying, well, actually, Paul, there is here we are, we're at a big round number on the Russell 2000, and we've printed there, a bearish engulfing candle at a level where we've bounced away from, haven't we, in the past. So I'll be looking there at the daily chart. What we had here, okay, what we had here in the daily chart is we had it's a bearish engulfing candle, it's a bearish pin bar, it's a bearish key reversal. There's like a one candle combo, okay, a one candle combo there, and You can see it try to just get up above it, which is why we always have our stop losses a bit above our candle, but you can see it's just kind of rolling itself away from there on that Russell. So that big, as I said, confluence events, big round number, we're always interested to see how that plays out there. But certainly this morning, we've come down to, in terms of the American morning, we've come down to the kind of the lows, all right, yesterday, which is Friday's lows, okay, into that area there. But again, I'll keep an eye on that, see how that reacts to that. If you look at S&P 500, S&P 500 has probably been the most calm of the lot of them. Excuse me. So I always just want to sort of just draw in what the highs and lows of previous sessions areas, just to see, it could be areas where the market might wish to make a decision about what it's doing, and that's what I'd be looking at. And if we look at that, if this was another time, these kind of pin bars, inside bars, followed by, big engulfing candles, key reverse formations would be of interest to me. But as I said, around the actual open, I tend to give it 15, 20 minutes just to, well, you can see for yourself, you can see the sort of the size of the candles here, the price action during the European session and how big those candles are now. Okay. And you can see that, let's get this into. We can see that price has shot up, price has shot down, price is shooting up again. Okay, it's volatile, all right, and so as I said, I'm normally happy to wait for 15 to 20 minutes to let that kind of work its way out, work its way through, and then decide how to trade that afterwards. Okay, so it's a little bit of a 1 minute double bottom on there, right? But yeah, as I said, it's the price is swinging about a great deal. Okay, that's yeah. You just let in those particular times, that's when I sort of tend to let the market just do its thing. I'm not interested in trying to pick fights there. Okay, it rarely ends well as a particular as a strategy. So we've got a little bit of a mixed bag. The interesting thing on that Nasdaq, has having gone up to the highs of this morning, it kind of dropped its way down, right down to the lows of this morning, like drawing those levels, and it's reversed off that. These are kind of liquidity reversals. There's lots of different people who want to try and trade them in different ways. But just us watching it here, I'll just be a watcher on that at the moment. Okay, and see what happens. We've got Russell going down, S&P trying to go up, Nasdaq trying to rally. The Dow had a pullback and is trying to rally off it. So, as I said, I like to normally see the indices sort of just moving in unison, moving in lockstep together. I find that tends to be a better trading environment for myself. Just if you think about what we've done this over the last few weeks, it's seemed that the kind of Monday session, here when the open US indices has been significantly volatile, and that's what we're dealing with here. And it might well be that we have to wait until the sort of the start of the new hour to find the best sort of trading opportunities, when, as I said, when the indices are all in a little bit of contradicting each other. So, but that's just about us being patient and waiting for the right opportunity, rather than just trying to leap in. Yeah, mix it. Let's have a little look at once again at the Dow here to see whether it's going to come back up to this area, whether it would give us drawing tool there, whether we're going to see it, is it going to form a double top, all right, before rolling over, or does it even here, does it not actually even have the energy for it before it rolls over? So I would just be keeping an eye on this. Okay, coming into the next hour, you'd be interested to watch and see how does that look on the. Let's have a look at that. Clearly, they bounced off that 30-minute to 200 period moving average, but you can see it has been, the Dow has been strong, especially after Friday's post NFP move, and we see where we've been in this morning, but it's just let's have a little look. I'll be just watching. Yeah, I'll be watching that to see how that plays out. Does it double top, or does it just continue to fly ahead? or does it roll itself over there? So yeah, I'll be definitely be keeping an eye on the Dow. Nasdaq, it's if you look at that, the Nasdaq is back in the kind of middle range. It's tapped both the highs and the lows and just come back into its range there. Okay, and so it's, it needs to decide what it wants to do. Maybe that's all it wants to do today, is just to tap the liquidity of where people's stop loss orders would be, and then come back into the middle of the range there. Okay, yeah, we just need to see how that does at the start of the next hour. Whilst we're doing that, let's have a look at what things like gold have done here. Okay, so I was interested here on the daily chart. Okay, the weekly chart has kind of swung back and forth, but we had, of course, the daily chart we had. We printed here that's a one candle combo. It's a pin bar. It is an engulfing candle. It is a key reversal candle. So talking about that is a one candle combo that it printed there on the daily chart. We can see that that does driven by the 4-hour chart there. Okay, on that and how that particularly occurred. Let me just get rid of this. So there you go. It's just getting in everybody's nerves a bit. Let's keep it on that. Just keep it quiet up there. Yeah, so gold is doing that. Let's have a little look at how gold is opening up for the US session. Well, you can see for yourself this morning, the European session, we sort of just drifted through. We've come back up, and now we're looking to fall away. Let's have a little look at this. We can see where the American session's open is. Yeah, that's just, we expect to see probably a bit of dollar strength there with gold. Gold is drifting its way off there back into the kind of range that it was in. Kind of the range that it was in there. This morning. Okay, nothing really there to get terribly excited about at the moment. So Russell's decided to continue its move down. We can see there. Nasdaq looks like it's going to move further down, as in S&P 500 will be looking at that as a means of markets just putting each of these candles its lower highs, or that, to me, that would be indicating that it would, there's more of a bearish slant there at the moment. Okay, as we've opened, so let's get ready for that to see how that plays out in the next hour. If you look at that on the 15 minutes chart, that might finish printing. See how that prints over the next 2 minutes. See whether that prints as like a high wave candle, indecision candle, or whether if it closes right down its lows, that could be a one candle combo there. A pin bar that's an engulfing candle, that's a key reversal candle. So keep an eye on that. Okay, over the next minute or two. Okay, ladies and gentlemen. Unfortunately, we have run out of time. As they say, time flies when you're having fun. And I hope that has given you some food for thought with regards to price action combinations. There's plenty there. Just as I said, go and do the homework. Go and have a little look at it. Go and work at it. And I think you might be surprised that opportunities that arise for you once you get quicker at being able to identify them. As always, I wish you the best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week. Remember, next week we'll be looking at the COT report. And until that time, trade well, everybody, and I'll speak to you soon. Cheers.